Greeting and welcome everyone. Thank you for joining us today to discuss the Intellect Design Arena Limited financial results for the third quarter of the fiscal year 2024-25 ending 31st December 2024. The investor presentation and the press release has been sent to you and is also available on our website. Our leadership team is present on this call to discuss the results. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Manish Makan, CEO of IGTB, Mr. Rajesh Saxena, CEO of IGCB, Mr. Banesh Prabhu, CEO of Intellect AI, Ms. Vasudha Subramanian, CFO, and Mr. Vikash Misra. He is a partner and he looks after the strategy in the company. Besides, some other senior members of the Intellect management team are present in the call. Now I hand over to Vasudha to take you through the results. This will be followed by Q&A session where your questions would be replied by the senior members of the management team. Once the Q&A starts, you can ask a question by clicking on raise your hand. And then we'll unmute you and everybody will be able to listen to you. One safe harbor. I would like to remind you that anything which we say, which refers to our outlook for the future, is a forward-looking statement. This must be read in conjunction with the risk that company faces. With this, I request Vasudha to give her briefing. Vasudha?
Thank you, Praveen. Good evening, everyone. And thank you for joining us for the Q3 full year 25 investor earnings call. It's my privilege to take you through the highlights of this quarter. As you would have noticed from the press release and investor deck, we have significant milestones to share in this quarter. So today's discussion will cover 4 sections. Number 1, a deep dive into our financial performance. Number 2, the strategic initiatives that would significantly drive growth and market leadership. Number 3, how eMACH.ai is accelerating our leadership position in the market. And number 4, on market recognition and events. Now, let me begin with our financial performance. Revenue from operations for Q3 stood at 607 crores, while the total income is 625 crores, registering a growth year on year on a like-to-like basis. Our year-to-date revenue from operations for the year has reached 1,768 crores, while the total income is 1,828 crores. We continue to maintain double-digit growth in 2-year and 3-year CAGR on a LTM basis. Our license-linked revenue, comprising the platform, license, and AMC, stood at 292 crores, contributing nearly 48% of the total revenue this quarter. The LTM ARR as of Q3 was 700 crore, underscoring the trust and stickiness of our platform-driven solutions. EBITDA for the quarter stood at 121 crore with a margin of 20%. Profit before tax came in at 93 crore and profit after tax was 70 crore. Despite global challenges, we have sustained financial stability with 0 debt and 804 crore of cash in hand. The financial resilience positions us to capitalize on future opportunities, ensuring sustainable growth for stakeholders. Now, let me move on to the second section, which is about our strategic initiatives. Q3 was pivotal for Intellect as we continue to execute bold strategic moves to strengthen our market leadership and drive sustainable growth. A significant milestone this quarter was the signing of an agreement with Central One Credit Union, enabling Intellect to assume its digital banking operations. This agreement marks an important step in expanding our presence in North America, a region critical to our growth strategy. To put this agreement in perspective, we had stated in earlier calls that North America is our next focus geography after our success in Europe, initially with the transaction banking products and subsequently with consumer banking, wealth, and insurance. We have a significant presence among the PNC insurance leaders with our Purple Fabric platform adopted by 20 plus carriers after individual POCs and evaluation. Our liquidity and payment products also enjoy an installation base with the market leaders in the US and Canada. We recently struck a large engagement with a market leader in Mexico. This arrangement will further strengthen our presence in geography, taking our digital engagement platform to a pole position. We are excited about our association with the credit unions and the possibilities with our eMACH platform in driving their transformation agenda, as well as that of their other financial leaders in the US and Canada. The transaction is expected to close the next few weeks and will serve a substantial network of Canadian credit unions. Now, the second initiative is on the SME enablement through global linkers. Our strategic investment of 20 crore in Digivation Digital Solutions Private Limited positions Intellect as a leader in corporate and government e-procurement, driving growth in trade and supply chain finance globally. The Asia Pacific has been identified as a major trade corridor in most global studies. Similarly, the vibrant SME segment has been identified as a key engine of economic growth in every developing economy as well as advanced markets. Global Linker is a startup in the SME ecosystem space that offers shopfront and e-catalog services to SMEs, apart from access to financial services through partnership with banks, and has an enrolled base of over 300,000 SMEs. Intellect's eMAC platform encompasses the IPX, ICPX, and IGPX platforms that power the intelligent procurement process for corporate and governments. Our transaction banking products supports global trade and supply chain finance apart from the regular payments and collections. We see significant synergies and potential in the IP assets coming together to form an interconnected commerce ecosystem with value accretion to all participants like SMEs, banks, buyers, and the platform. Let me go to the section 3, which is about eMAC being a catalyst for transformation. eMAC.ai continues to lead the digital transformation journey for financial institutions worldwide. The zero waste architecture based on first principles thinking helps financial institutions accelerate the realization of their transformation vision while keeping total cost of ownership across run the bank and change the bank initiatives the least. In Q3, eMAC.ai achieved significant milestones by being chosen by 11 global customers across key regions, showcasing its capability to address diverse and complex financial requirements. The notable deal wins include one of the largest US banking institutions focused on asset and wealth management adopted CTX, Corporate Treasury Exchange, to enhance liquidity management and automate cash operations, ensuring efficiency and superior client service. A wholesale insurance brokerage firm specializing in risk management across multiple P&C lines has adopted eMAC.ai Magic Submission, Exponent, and Risk Analyst, empowering underwriters with AI-driven tools to streamline workflows and improve decision-making. A prominent Nordic wholesale bank reinforced its trust in CTX, leveraging the platform to optimize liquidity and provide sustainable treasury solution. A Spanish banking giant expanded into Asia with eMAC.ai payments, focusing on innovation, operational excellence, and seamless customer payment experiences. A large Turkish bank implemented the DEP to deliver AI-driven, personalized real-time interactions for customers across all touchpoints. Africa's largest financial institution awarded as a multi-country CTX engagement spanning across 22 countries, replacing legacy systems with scalable, future-ready treasury solutions. A major South African banking conglomerate adopted the digital engagement platform, enhancing customer satisfaction with personalized and seamless engagement. A financial services leader in Southern Africa implemented eMAC.ai core banking to provide contextual and personalized banking journeys for its evolving customer base. A prominent corporate bank in the UAE renewed its trust in eMAC.ai Trade, delivering a unified omni-channel experience across its transaction banking services. A top Saudi financial institution adopted eMAC.ai Trade, enabling seamless omni-channel solutions tailored to the dynamic needs of trade corporates. Finally, we are thrilled to announce that a greenfield EMI in Malta has revolutionized its services across the European Economic Area by implementing our eMAC.ai and iTurmeric platforms, significantly enhancing the customer experience and operational efficiency. So we now saw how eMAC.ai was a catalyst for transformation. So eMAC.ai is driving business impact across the globe. Its composable open architecture coupled with the iTurmeric composability platform accelerates transformation initiatives with more customers successfully adopting our platforms this quarter. Here are some of the go-live highlights of Q3 that showcases eMAC.ai's global impact. There were 3 go-lives in Americas, Magic Submission, powered by Purple Fabric, 1 go-live in Europe in Corporate Treasury, 5 go-lives in India and Digital Core and Treasury Solution, Cash Management and Wealth Management, 4 go-lives in Middle East and Africa and Central Banking Transformation, Core Banking, Cash Management and Digital Banking Innovation, 2 go-lives in Asia Pacific in Liquidity Management and DTB Platform, and 1 go-live in Australia and New Zealand involving core banking transformation. So for the year till date, we had 34 wins and we had gone live on 37 digital transformational projects. Now let me come to the last sections about events and market recognition. Let me talk about the events. Intellect also made its mark in key industry and technology events during the quarter, showcasing the prowess of our eMAC.ai architectural and technical superiority. Cybos, the annual event for corporate banking, was held in China in October, where we demonstrated our AI-led trade and supply chain platform, apart from other industry-leading platforms of CTX, payments, and digital transaction banking. In the transaction banking business, we also held a launch of wholesale banking in Dubai. At the InsurTech event at Las Vegas, we demonstrated the versatility of our Purple Fabric platform and industry-specific products such as Magic Submission and Risk Analyst. In the consumer banking business, we hosted the Global Finance Awards event in Washington, attended by the global chieftains of the industry. We also hosted the GCB Oxford Central Banking event, attended by several leaders from the central banks world over. Arun delivered the plenary address at the Beyond Banking Summit at London. Closer home, we held an event for bank treasurers at Mumbai and a 2-day event for transformation through eMAC.ai for bankers from the Indian subcontinent. The response and feedback during and post these events enthuse us further in our pursuit of global leadership in the financial technology space. Now on the market recognition, our leadership is consistently acknowledged by top analysts. We are recognized as a strong performer in the Forrester Wave for digital banking platforms. We are named category leader in the Chartis Risk Tech Quadrant for regulatory reporting. We are ranked leader in Ombia University Payments Hub with best-in-class vendor execution. These accolades validate our position as the preferred partner for financial institutions globally. In conclusion, Q3 has been a quarter of transformation marked by stable financial performance, bold strategic moves, and innovation-driven growth. eMAC.ai platform continues to accelerate our acceptance and adoption by leaders across geographies. In December, we hosted a session with specific focus on Purple Fabric, our enterprise connected intelligence platform. The potential of these technologies and platforms is evident in the robust pipeline built and enhanced market activities. With the advent of the new calendar year that marks a new financial year for institutions in the advanced markets, we are hoping for further closures in the ensuing quarters. We are confident in our ability to deliver long-term value for stakeholders through disciplined execution, continuous innovation, and customer centricity. Thank you for your time, and I now welcome your questions. Over to the operator.
Before jumping to question, I think Central One is a very big initiative. Can you hear me?
Yes, Arun.
Yeah. Yeah. So fortunately, we have Rajesh here. So Rajesh, investor will love to know what agreement you have signed in Canada with Central One and how Central One is important from its growth of GCB business to cross 1,000 crore for next year.
Yeah. Thank you, Arun. I think let me just step back and talk a little bit about what we have told investors a couple of quarters back. I think we've talked about a strategy of first going to Europe, following GTB, and building a business, a good business, retail banking business in Europe. We've had decent success there, and our next bastion was North America, wherein we said we will go into Canada. So Canada is an important market for us. It's what we call as a strategic C1 market for us. So from that perspective, from a marketplace perspective, Canada is important. And if you look at our product, and if you've been listening to our investor calls, our platform, our digital experience platform, which is a codeless platform, has been seeing a lot of success in the markets built on the eMAC.ai principles, and it's seeing substantial success in the last couple of quarters. So if you look at both the market and the product, we had an opportunity to look at C1. So I'll just take 2 minutes to give a credit union perspective for Canada. In Canada, there are about 390 credit unions. 200 plus are in Quebec region, which is a French-speaking region, and 190 are in the other parts of Canada. C1 has been formed by for serving these credit unions, and it has 3 or 4 businesses. One of the business that C1 does is to provide digital platform for retail customers, SMB customers, and commercial. So out of this 190 odd credit unions, C1 has a majority of these customers who run their digital experience platform on C1's platform. They have three platforms. They have Member Direct, Forge, and a mobile app. All of this is multi-tenant and SaaS-based model. We have signed into an agreement with C1 to acquire this digital business and run this business from C1. And with this, as Vasudha said, the deal will close in a couple of weeks from now, wherein we will be getting a substantial number of employees from C1 to come into our fold. So we will have scale in Intellect Canada with Canadians coming over and working with us. And also we get substantial number of customers who will become our clients now from a digital experience platform. The important thing to note is that this is not only about digital experience platform, but it's also about opportunities where we can cross-sell core banking, we can sell lending, loan origination, and also commercial banking solutions. Most of these credit unions are also looking at getting into the commercial banking space. So from that fit, we are suddenly seeing a significant scale that we are getting into from a strategic market in a strategic line of business for us. Arun, back to you.
Yeah. Yeah. So thank you, Rajesh, for concluding this acquisition of the more than 150 clients in that region. So this makes America's over 200 clients for Intellect. And as we said, there are 5 markets for the investor. America market was the last when we entered in a strategy. And that was the focus you were keep asking, and ARR is the second focus. So this brings a 200 crore of ARR equivalent, and this business will bring 200 crore of additional ARR through this business to the revenue pool of Intellect. So this is a substantially valuable entry from 3-dimensional perspective. EMAC expanding the product line into a large number of customers, North America entry, and expanding EMAC AI footprint from a perspective of multiple product can be sold. So this is one very, very important leveraging we are looking at it. The second part was Manish to highlight around what is the global linker investments could be, or the whole GTB growth engine is working on. So if we just take just to update, because all the 3 businesses now are accelerated in 2025. Intellect AI, we shared on 18th of December, we shared with you Purple Fabric. The potential of Purple Fabric could be 1,000 crore to 5,000 crore. Manish is sharing the growth engine with GTB, which is our frontline business, which is the first business which crossed 1,000 crore. Now Rajesh business will be crossing 1,000 crore. And then the third business which we are creating, Intellect AI. So that's the kind of a storyboard what we have telling you from last 5 years. I think step by step is moving in the right direction.
No, thanks, Arun. This is an important asset from my perspective. We've focused from a transaction banking perspective of how to expand the cash management and trade supply chain capabilities for all large corporates and SME mid-market segments. What this offers us as a capability is to be able to offer 3 things now. Number one, it's a capability equivalent to Alibaba to create a marketplace. It has capability like Shopify that you can create your e-markets and you can create your own engines from where you can do payments. And the third capability it brings on board is that I can embed this into my CBX channel now, whereby the banks can get access to a much larger SME customer segment base. So our attempt with this investment will be to scale this up to add to the edge of our platforms, whereby all SMEs can be onboarded through it, and then we can potentially run the entire life cycle of an SME, where banks will go after them through this route. This will help in the supply chain as well as receivables, which the large corporates really look after them for. This is a good footprint in the market right now. It's about now taking it across Asia, Middle East, and Europe for its expansion, and in stage 2, take it to North America. So we're going to closely work along with the team to scale it up. Our distribution access to the products, sophistication will be the magic which will create with this. Back to you, Arun.
Thank you. Manish, anyway, we shared last time, so let me hand it over to investor to ask questions of this strategic move, with what we have at this point of time.
Thanks, Arun. Now, in case you want to ask a question, please click on raise your hand. Please click on raise your hand. First, we have Mr. Rahul Jain from Daulat Capital. Mr. Rahul Jain from Daulat Capital. Please unmute yourself.
Yeah, hi. Hope I'm audible now.
Yeah, Rahul, please go on.
Yes. Thanks for that detailed explanation, but I think I would still need some more help to understand about this central one kind of a transaction. What I've got so far is basically we might be taking over the tech team of C1, and is it also involve migrating from their current Backbase platform to emac.ai, or that's not part of the equation at this point? So love to hear more on this.
Rajesh?
Yeah, so I think Rahul, thanks for that question. I think what we are taking over, as you rightly said, is a team of people. Predominant of team in that is engineering, solution architect there, but we are also taking over a team which is the relationship management team, the sales team, the product team. So it's a combination of members coming from various fields, predominantly being on the engineering and the solution architect side. To your second question on Backbase, a couple of years back, C1 had decided to go into take Backbase, but unfortunately, they were not able to scale up, and that project was discontinued. And so they went with a few credit unions to Backbase, and then they had to discontinue and come back to the original, their homegrown solution. And that's the solution I talked about, which comprises of 3 products: Member Direct, Forge, and their mobile app. The possibility for us is that now, over a period of next couple of years, we would like to migrate many of these customers from this platform to our digital experience platform. So we are going to run this platform and then work with the credit unions to migrate these customers into our platform.
So, so Rajesh, if I got you right, essentially right now, this is just like a rebadging of their team, and we will have a fixed billing on this team. And over a period of time, since we will be knowing all this 150 odd credit union over a period of time, we might chase some of them into our customer base and migrate it to a much better and modern solution. Is that understanding right? And if yes, then what are the billing and cost that we might see on an annuity basis at this point?
So I think, Rahul, you have to understand this like an acquisition of business of 200 crore as a revenue line, ARR business 200 crore, running it and upgrading it using our emac.ai technology. As simple as that.
So basically, we would be getting a 200 crore from this 150 credit union, or this would be from C1?
That's right. That's right. From the credit unions.
Okay. And eventually, if we are able to migrate, the potential of this 200 crore will keep on increasing over a period.
Keep on increasing. So our target is, how do we cross-sell them, core banking and lending, and upgrade them on DEP.
Yeah, just to add, Rahul, just to be precise, it is 160 customers. So that's one. And I think important point for all of us to notice, the opportunity is not only to migrate them to a digital experience platform, but these credit unions also, as I said in my earlier preamble, are looking for core banking, lending, and commercial banking solutions. So there is an opportunity to cross-sell other eMAG.ai assets that we have.
Right. And just last bit from my side on C1, is there a lock-in for us for the employee base that we are going to take it, or we are open to optimize it whenever we wish to do that? And secondly, on the other transaction that we have done, is this an strategy wherein we would start using our cash flow to add more capability on more product side, or it's like one-off transaction and we would not like to see this as a trend?
Okay, so just to respond, first question is around, sorry, Rajesh, you can respond.
I would rather not answer
Yeah.
that question, Rahul, because it's a little sensitive about employees. So if it's okay with you, we will let the deal close and then we will talk about that piece.
Sure, please. On the second question, if you could close.
The second question is about strategic fit. We have a CPX and GPX announced earlier. That's what the two product government. So we want to get into procurement space, and this is the SME business space. We saw the opportunity, and it fits into DTB. So we have over 50 customer on DTB. So it's a kind of a, it's not just cash to be reinvested. It's a part of the strategic fitment which require this investment to be there.
Can we see it as a module extension to our existing GTB system?
That's right. That's right. It's a where we are bringing all the CPX, GPX, DTB, and global linker into one common ecosystem. It's an ecosystem design investment.
Good to see all this transaction. It's like we are working beyond the usual path. Thank you, and
That's
I
right.
will jump back to the queue.
Yeah, all this
Sure.
significantly expands the TAM which we are going after, and to be able to bring in things for the full life cycle of an SME. Next
Yeah.
one.
Thank. So I think Rahul is here through, I think. So thanks, Rahul. Next, we have Mr. Meet Rush, Aquarius PMS. Meet?
Yeah, thanks for the opportunity. Am I audible?
Yeah, please go on.
Yeah. So first question is on the few of the deals which were won in earlier quarters, but were slipped to the subsequent quarters due to delay in compliance or signing maybe. So just wanted to know, have those deals started to ramp up?
Manish?
Yep. With that, some of those deals are what Vasudha read out, which we closed in South Africa and we closed in US.
Okay. So all of those deals have been started, right?
Yes.
Okay. Second question is in terms of FY25 revenue. So earlier our expectation was to clock a 15% growth in FY25 excluding GEM revenue. But if I look at the 9 months revenue and the QOQ ask rate for Q4, it seems a very bold task. So that guidance is still intact, or are we expecting some lower growth?
Yeah, obviously, last time also you mentioned the guidance. We have stopped giving guidance, but I think we are looking for expecting much better next quarter. So that's what we would like to look at it. I mentioned to you 700 crore a quarter. I think we'll be closer to that.
Okay. Next question is regarding R&D expenses. So Vasudha ma'am, we capitalize 140-150 crores worth of R&D annually, and another 200 crore worth of R&D spends get expensed out in P&L. So just wanted to know the breakup of that between the maintenance or upgrade of our existing products and the R&D which is spent for new product development?
Anything related to the new product development is what is allowed to be capitalized. So for maintenance or something is anyway being expensed. Whatever you see as part of the CWIP, which is the capitalized work in progress, relates to the new product development.
Okay, okay. And can we expect the current run rate of R&D spends to continue going
Continue.
forward?
Yes, yes.
In absolute terms.
Yeah, yes.
Okay. So as a percentage of revenue, it may decline.
As far as the R&D spends are concerned, we only look at the absolute number. So 140 crore is the target that we have. I mean, that's the budget that we had put in the beginning of the year, and we'll be meeting that budget.
Yeah, in percentage term, it will decline. That's right.
Yeah.
Understood. And can I squeeze in one more?
No.
Yes, yes.
Okay, quickly, please.
Yeah, yeah. So last is in terms of the contract assets that we report under the other financial assets. So just wanted to understand the nature of this because if I look at our contract assets for last 5 years, they've remained between 100 to 120 days of our revenue. While if I compare that with some of the other product companies as well as service companies, that normally ranges between 30 to 50 days. So just wanted to understand the accounting treatment and the nature of this.
Generally, in a product company, it will be quite difficult to have it between 30 days and all. So it will be quite high because the accrual happens as and when we complete the deliverable milestones. Whereas the invoicing will happen only when we kick in the payment milestone, only when we meet the payment milestone. So the gap will always be there in many product companies. So that's the reason for the 120 day.
Okay, okay. And related to that, so what is the normal deal cycle once we sign and once we close and the revenue is booked?
The moment, see, all those deal wins that you are seeing this quarter, you have some accrual in the books.
Okay.
We report deal wins, whatever deal wins that you see as reported during the quarter, we have accrued against all of them this quarter itself. So between signing and approval, there will not be much of a time.
Okay, okay, okay. Thanks a lot. Thanks a lot.
Thank you, Meet. Next, we have Mr. Vivek Kumar for Best Paul. Vivek, quickly ask your question.
Am I audible, sir?
Yes.
Hello? Am I audible?
Yes.
Sir, my question is regarding if you see the last 2 years, our pipeline is growing at much faster growth rate than our revenue, even if you take away GEM. So someday, and with Trump winning and yields falling and financial institute, like if you see the bank stocks, I understand it's a very superficial comparison, but people are positive about banks investing in tech and all in US. So because are you confident about this pipeline converting? Because even in the last quarter, you mentioned why many deals are getting stuck at a stage where and things are taking time to move. So do we, because pipeline is growing at a faster rate than our revenue. So that's my question. Maybe I think I made it clear. So will we see the same growth rate translating into revenues?
Obviously, that's what we are saying. Q4 will be much better. I mentioned in the previous answer.
So we can go back to 15-20% from next year. We can hope that. I'm not asking for guidance, but because pipeline is growing.
And we have a good pipeline, and I think the pipeline to closure, it's a cycle time of 12 months. So when we went to eMAG.ai marketplace, we are putting to Europe and Americas. So now, if you look at it, Europe and Americas, both market, Americas will be 600 crore market. As of now, Europe will be another 600 crore. So we have a potential for these markets to become 1,000 crore market. Both the market could be 1,000 crore market in next 4 years. So, and then we have a Middle East market, which could be Middle East and Africa could be 800 crore market, APAC and ANZ could be 800 market, India is 800 crore market. So this is a kind of a landscape we are planning to expand, and we are quite confident of meeting some of the expectation which you have, because there's a delay cycle between when pipeline gets built and there's a 6 months delay from the pipeline to the closure.
So On GEM,
Okay.
about the receivables, can you throw, like, have we got from government, and any opinion on that? Any comment?
No comment here. Government is government.
Thank
So
you, sir.
government is
Thank you.
government. So they are delaying the process right now. We have to look at it, what we can do.
Oh, thank you, sir. Thank you very much, Arun.
Yeah.
Thank you, Vivek. Thank you, Vivek.
Next.
Next, we have Mr. Manoj Dua from Geometric. Mr. Manoj Dua.
Am I audible, sir?
Yes.
Yeah, please go on.
Okay. So, sir, last few years we have seen AI as one of the greatest technological innovation. You were very earlier for that. As a individual, we are now understanding the importance of that and trying to learn. So, I know Intellect is more than a software. We have a relationship. We know the exact detail of banking and insurance and knowledge of the industry. Now, if you see, AI is helping us to create a product more cheaper, and anyone who is a beginner in this industry or a new, is it an advantage for them to build a product more cheaper, as we have talked a lot about earlier that we have spent so many hours to build a product, but at the same time it could be useful to you to build further new things. Can you throw some light on it, just as a school kid to explain to me, because we are not a computer person.
So there are two things about the enterprise grade product in banking. For large corporations like HSBC, HDFC Bank, AI can help facilitate reducing some of the drudgery work to build the product. But fundamental product is not just the coding. It's about entire life cycle of saying, can I build a car? Can I build a Mercedes car? Obviously, it requires much more than a Mercedes building requires much more than just the assembling the car, which could be done differently over here. So I think AI will have a two facet of it. How do I use AI to reduce my cost or to reduce the efforts for implementation to become more competitive in the market? That's a one facet which we are doing. Manish is leading that initiative of applying AI within Intellect for further strengthening. From a moat perspective that other people can build the product fast enough, I feel that in enterprise grade space, it's a long way to go for anybody unless they have a deep domain understanding, substantial domain understanding to make the right product for the customer. Because AI gives you 95% right, 96% right, 92% right. But for enterprise grade solution, we need 110% right, not 100% right. So that's the difference between the two of them.
Okay, and how now AI is an advantage to you going further? That you answered my first part. How AI is being in terms of reducing cost, whatever you have, or building, because you have already a domain knowledge. How fast can you accelerate new products or something like that?
Yeah, so it will definitely decrease the cost. We have targets to reduce the headcount for efficiency of AI efficiency, which is there. That's the one part of it. But second part is more interesting for the investor is we can build a business. If you can go back to the call of 18 December, which is published on a website, that's where we are putting a complete AI Purple Fabric as a product in the market, which we are first in the market for the AI as a product, which we are selling to many enterprises in the world. So please go through that script. That will be useful for you to understand.
Thank you. My last question is, as we are increasing TAM and building products, so I understand the lot of new cost is being incurred, and what operating margin, which are mature product throws, the cash flow throws, we are not able to capture that. As you said, that 800 crore will come from this 5,000 crore can come in 4-5 years. How much operating margin we can see from where the expenses which help us to grow are little bit reduced or comes at normal pace? How to look at that part? Not I'm asking for operating margin next year or 4-5 year period. I don't know whether at that time what we will be doing. Just a color on that to understand how much cash can come at that period.
So Manoj, the mature product gives a margin of 30% plus. So like GTB as a business, if you have a separate business, that will give 30% plus margin. Then GCB will be less margin. Then AI will be less margin. That's how the whole construct is constructed, book is constructed for as a portfolio book. So whenever the product gets matured significantly, it can start going up to 40% margin as a product, it's product level itself. So that's how a 4-year horizon we are looking at it, getting to 30% margin can be expected in 4 years time window.
That was helpful. Thank you and best of luck.
Thank you, Mr. Dua. Next, we have Mr. Pankaj Bobade from Affluent Assets. Mr. Pankaj from Affluent Assets.
Thanks. I'm audible, sir?
Yeah.
Yeah.
Well, sir, just wanted to understand, we have almost all the products launched and in the market. So how soon do you expect to reach sales revenue of around $500 million and margins of upwards of 20%?
4 years.
Okay, sure. And the second thing, regarding this C1, is this acquisition margin accretive or dilutive?
Yeah. Initially, it will be dilutive. Overall, it will be accretive. With the cross-sell opportunities, it will be accretive. Individually, it may be dilutive.
Okay. Thank you. Thank you, sir.
Thank you. Next, we have Ruchita Kadge from iWealth. Ruchita, please unmute yourself and ask the question. Ruchita, are you there? Ruchita Kadge from iWealth. Please unmute yourself.
Hello. Hello.
Yeah. Yeah, please
Hello.
go on, Ruchita.
Hello. Can you hear me? Yeah. So, good evening, sir. So my question was on the Purple Fabric platform. So just
go on,
if I
Ruchita.
have missed it, is our POC done already? Hello.
Yeah. Hello. Yeah.
Hello.
POC is a full product ready. It's been in boot camp. So we'll forward you the link of this full system. Full investor call is there. Praveen, can you forward him or the full call? Product is in the
product. Yeah, the product is being used by many customers, both in North America and in UK.
Okay. Okay.
Hello. Sorry, I kind of missed it. I couldn't hear the answer. There was some technical issue. Can you please repeat it? Like, is the POC done?
Yeah. So this is a live platform. It is operating in if you go through the December thing, which was attended by almost 100 investors, you can go through the script and it will tell you that the platform, which has evolved over the years, is fully functional. Many pieces of that are already being used by customers in North America as well as in UK and few other customers in different geographies. But it is primarily up and running. So there's no POC. It's not like, it's not like the platform is not live.
Okay. Okay. Understood. Understood. Thank you.
Thanks, Ruchita. Next, Mr. Ram KVL. Looks like he has left. Ram has left. Next, we have Mr. Prolin Nandu from Edelweiss. Prolin?
Hi, Praveen ji, I'm audible?
Yeah, Prolin. Please go on.
Yeah, I have 3 questions. So, Arunji, firstly, on your comment that from Q4 FY25, we should be at 800 crores revenue, right?
No, not 800 crore revenue. I have not said 800 crore revenue.
Sorry. ARR. I'm sorry. My bad. Right.
Okay.
So, is that the base now going ahead, or would it be, from? So how? I mean, should that be a new normal?
No. Yes, we are saying this for full year. Some of the deals got postponed in this quarter as well. So this quarter will be definitely Q4 will be much better quarter. We are not giving guidance to it, but I'm saying we are looking for 20% growth year on year. That trajectory we want to keep it, whether 15%, 16%, 18%. Those are the number which we look at it as a trajectory.
Understood, Arunji. So no, so my larger question was that one of the reason why we stopped giving guidance was because of these deal delays, right? And we were probably
That's right.
targeting larger deals. So when will you get that confidence back of giving guidance? And this is not from a guidance perspective, but from a clarity on pipeline perspective. I'm asking this question. Is it still a bit of delays which are going on in the system? Or now that pipeline is declogged, how do you see that?
Let me just want to clarify that point to you. The guidance is because these deals are of a very large values in enterprise space. If deal value is $5 million, it switches the revenue and ratio. Last 12 months numbers are more projectable. So if somebody talk to me next 4 years where we will be reaching, we are saying we can be 4,000 crore in next 4 years. That is a very easy for me to answer it. But when you say what will be the next 90 days, I cannot say what next 90 days. Next 90 days, we are saying this Q4 is definitely looking close to 700 crore. But whether all the quarters will be of that baseline, we love to have it. Let's see how much we can able to do it.
Sure, Arunji, that's understood. Second question is on this AI, and you will be using internally also AI to see, and I think in the Purple Fabric call also you mentioned that probably you won't be adding more employees, right?
That's
Maybe
right.
right. And I want to link this comment of yours to the margin guidance, right? Where in some of the past calls you have guided for this 30% trajectory a lot sooner, right? Maybe next 6 to 8 quarters is what you had guided for. And internal use of AI, can this accelerate the growth of margin towards that 30% aspiration is what I want to understand.
Yeah, definitely. That's a whole objective. Manish, you want to highlight? Manish?
Yeah, sorry, I missed
Yeah,
the. Could you please repeat that? Sorry.
Then how the AI will help you reducing the cost and margin, improving the
okay.
margins.
No, good. Now, I think two things. One is we've experienced good success with Purple Fabric by embedding that in as we build out our applications. And those are things which Banish has been talking to about it. I think the inspiration we've taken from that is to internally put that in use to automate of how software engineering is done. It's look at the 4 stages of a software lifecycle: an engagement with a customer, the build, the validation, and migration. Step one, we are looking at the entire build cycle. How do we bring in significant productivity? Next will be how do we the validation cycle? How do we bring in significant productivity? The two ends of working with the customer and migrating, those will be in the second phase we will take at. So over next 2 quarters, we focused on the middle two legs of driving engineering using this as well as validation using AI.
The margin obviously will go up because if you're not hiring more people, so it's a obvious corollary that it will. If I'm growing even margin by 10, revenue by 10%, margin will grow by 20% here.
Right. So then in that sense, maybe that 3 to 4 years timeline of 30%, you would, want to probably, is that more like a conservative kind of a number? Because see, Arunji, if you look at the product companies, right, there is an operating lever. Some of your peers also, which are into the company, are earning far higher margin, right? And we are starting from a lower base, right? So is that 30% can be achievable slightly sooner than what you have probably called out earlier in this call?
We can earlier, but let's not look at earlier. The point is a product company, like a lot of product companies are not cross 1,000 crore numbers. If you look at it, if you have focus on margin, your growth gets stopped. In a technology business, your growth is important. So we have a credibility now. We made GTB business 1,000 crore. I'm saying we'll make GCB business 1,000 crore. Then we'll make AI business 1,000 crore. How many companies in India have a product business of 1,000 crore? Three businesses of 1,000 crore nature, and that requires investment. If I publish separate numbers of separate margins, you will see the margin of the GTB business is very high compared to the other businesses.
Sure, Arunji, that's clear. And last question from my side is that in your slide deck on slide 30, right, where you have probably talked about the funnel, almost 10,000 crores of the value of the funnel in Q3 FY25. Do you want to call out a number out of this which can be attributable to Purple Fabric?
Not right now. As of now, we are not separating it.
Okay. But any timeline by which we will be able to, give this number? Will it be a bit a year from now, or do you think more?
We have good traction. We have a lot of boot camps happen. We have around 100 different people are in various stages of interest being shown. A lot of service companies are showing interest that they can use. So this is the Purple Fabric platform. We are saying tier 2 and some of the tier 1 SIs and tier 2 SIs. We are giving to them so that they can solve the customer problem. So it's a platform play which SIs are feeling very, very interested. Service companies are finding that's a good way for them to grow their businesses better.
Sure. Because there also you are saying that it's not a question of when we reach 1,000 crores, it's a question of 1,000 or 5,000, right? Did I get you correctly? So probably the order booking should be happening in the next 1 year, right? I mean, to probably achieve that number, right? Am I correct?
It's an adoption. Revenue number is not an objective for Purple Fabric. Adoption is. How do we get 10,000 people using Purple Fabric will be our first objective.
Sure, that's very clear.
This is a platform play, not a revenue play in the beginning.
Okay, that's it from my side. Thank you so much, Arunji, and all the way.
Yeah.
I think.
Okay, that's fine. We can close the call.
Prolin has gone. Thanks, Prolin. Next, Ram has come back again. Mr. Ram KV of QFSPL. Ram?
Yeah, hi, can you hear me?
Yeah, please go on.
Yeah, thanks, Praveen. Arunji, the question is addressed to you. Typically, I have been with the IT product space, so the question is coming from macro point of view. So I would just like your thought process on that. We have seen typically in the IT product space that investment goes in, the products become live, volume builds up, and then at the end of it, the PAT margin or the gross margin goes up substantially. In Intellect, we have been remain invested over the last 6-7 years. When do you think in the next 3-4 years will the tipping point come when PAT will grow up much stronger than what we have seen in the past, especially in the background of 90 mil quarter revenue?
Sure. And that's what Rami just talked earlier also when you are not on the call, that the PAT margins will definitely grow. If you look at the cost structure in last 4 quarters, it's remained around 475 to 480 or 485 crore. And the revenue number is so if it is a 607 crore number, or you take 625 crore, then number will be different. As soon as it becomes 700 crore, the margin will look very, very different. So if you just plot yourself the number of the top line growth, the margins need not be articulated to you. It will automatically improve. So that's what I'm saying, 30% margin can be possible there. It's a question of how much we reinvest back into building it. Business 1, business 2, business 3. So now business 1 has been 1,000 crore plus business GTB. Business 2 is now GCB business will be 1,000 crore next year. Now we are building AI business into this. So that's how the margin getting redeployed. It's not that current business have a lower margin than the other product companies.
That is obvious because the mix will always change. Correct.
Yeah. So the growth, as an investor, you have both the things are important from a growth perspective, because a lot of product companies will become very, very stagnant. If you see many companies doesn't grow, product company, many companies doesn't grow. They just grow the margin, but not the revenue.
Exactly. So I was looking at the base part of it. So my question focused manner is, in the next 4 years, will we see 1,000 crore
margin,
vertical?
1,000 crore margin will be there after 4 years, definitely. If you want to put that in my mouth, we are also looking for 1,000 crore margin in 4 years.
Okay, great. Thanks a lot. Thank you, sir. Thank you. Thank you.
Thanks, Ram.
Indirectly saying it, मैंने कहा तू सीधा बोल दो यार, तू गोल गोल घुमा रहा है.
Thank you very much, sir. All the best.
Thank you.
Thank you. Thank you,
My
Ram.
pleasure.
Next, we have
Bye.
Mr. Chirag Kachadia from Ashika Institutional Equities. Chirag,
Hello.
are you there?
Yeah. Hello.
Please go on, Chirag.
Yeah. So I want to know your thought process on demand environment and outlook from 3 to 4 years point of view. Yeah.
I have to repeat again. I think Vasudha has told Vikas as a part of strategy. Would you like to share the market outlook?
Yeah, so Chirag, a good question, but I guess probably you were not there before. Yes, see, the demand is very much there, and which is pretty evident from the pipeline that we have. And the outlook also we talked about in the next 3 to 4 years. Arun also talked about it, is to create $1 billion thing. And that's where we are heading. And just a few minutes ago, he just talked about the margin piece also. So I guess you had all the answers. Maybe you just need to just go back and rewind a little bit more. That's
Yeah,
it.
I'll going again and we'll see. Yeah. Okay. Thanks. Yeah.
Thanks, Chirag. Next, we have Mr. Ryan Floyd from Barca Capital. Ryan, are you there? Ryan?
Yeah, I'm here.
Looks
Can you
like
hear me
Ryan.
okay?
Yeah, Ryan, please go on.
Where are the financial statements on your website? Let's just start it easy. The financial statements. So you guys are doing an investor presentation for December 2024. Where are those financial statements that all of us can see?
It's there.
Right.
It's not on the website.
It's not on your website. And this is not the first time that you've done a call where it's very difficult for investors to see the financial statements before the call.
Ryan, you mean for this quarter?
Yes, for December 2024. It's not on the website. And where is the presentation?
It's been sent to investors. I think at this point, Nachu, Praveen Malik, we need to look at it, that when we are loading it's on the website or not.
It's not on the website.
Okay, so there's a delay in the
it's
loading
very
on the
frustrating.
website.
I'm sure I'm not the only one that's frustrated by this. We're having a conversation here without knowing what the numbers look like. So let's do our best here. I think that we went through a bunch of deals, which sounds great. Usually when you sign a deal, you're bringing in revenue. Can you give us some rough sense of the revenue growth by segment, like license, maintenance, SaaS, and if it went down, can you give us a sense of why those segments went down?
Yeah, Ron, I think all of that part of the presentation, maybe we'll put you into investor list of communication.
Yeah, that's okay. But let's talk about it now, please.
Yeah, so
because we haven't talked about those things on the call, and it seems fairly important.
Vasudha, can you just share the revenue numbers again?
Yeah, sure. So
yeah, otherwise you switch on if you want to put the presentation or the.
Okay, let me voice out now. Yeah, Ryan, let me voice out now. Maybe you can even look at it later after it's been put up on the website. So the breakup of the revenue is like this. For the quarter, the total revenue, as you would have seen, the revenue from operations is 607 crores, while the total revenue, including other income, will be higher. So out of the 607 crores, we have about 118 crores for license revenue. SaaS revenues about 50 crore. AMC is 124 and implementation is 315 crores. So you can see some growth. Maybe if at all you want to compare with the previous quarter, there is a growth in the implementation revenue, AMC revenue, and also in the SaaS revenue as well as in the license revenue. So we have grown over the previous quarter in all these segments.
And that is for the quarter, not 9 months. That's for the quarter, year on year. Is that right?
You can the last 12 quarter.
Yeah. Okay. Let me also. Okay. If you compare it. Yeah, go on.
What is the free cash flow that we've produced? Because I think the free cash flow declined last quarter. This quarter, is the free cash flow margin on revenues higher?
It is higher. It is higher. When I say free cash flow, it would be as high as close to 50 crores.
Okay, what is that as a portion of total revenues? So this is after intangibles, this is after leases, like the
Yes,
free
yes, it
cash
is.
flow
It
that
is.
we can use
Yes,
for things.
right. It is after intangibles and after lease assets. Yes.
What is that as a portion of
It's closer
revenues for
closer
the
to
quarter?
10, closer to 10% of the revenue.
10%. Okay.
Yeah.
And if it's 10%, that sounds very healthy. So this deal in Canada, it sounds like you guys are buying their operation, which sounds great that you are looking at M&A. Can you give us some sense of what revenue multiple or approximate revenue multiple you're paying on this?
We are not.
Rajesh?
It's a very competitive industry right now, Ron. We are not publicly announcing the price we are paying for this acquisition.
Okay. Is it lower than the one at which you're trading? Could you give us at least some rough idea?
It's much lower, yeah.
Okay, great. That sounds interesting. Are there more acquisitions that you could make of modular product companies in financial software?
We want to go slow. Definitely, we'd like to look at it a part of this strategy to enter into. So each region, if you run, now America would have a 200, North America would have now 200 customer plus. We would like to have a Europe to also have similar kind of a number of the customers. So we'll look at its option, but we'll go step by step. As
Great.
you have observed our company, we are
Sure.
very, very conservative. First we build GTB business, then we build GCB business, then we build AI business. We don't go all around the business. Our focus is go very, very paced growth.
Right. If you're producing free cash flow to the tune of 10% of revenues, that will leave nice cash that you could potentially make nice acquisitions for. Have you mapped out I don't know, do you have someone or have you mapped out potential companies that in theory you'd like to buy? Have you reached out to a bunch or are these inbound deals?
As of now, acquisition is not a part of our core strategy. eMAG.ai is keeping us busy. We don't want to get distracted as a core part of the strategy. It's inbound only right now.
Okay. You mentioned on the call, I think that this Canada deal would not be accretive before cross-selling. It seems like what should be a good product. Why, when I hear that, I'm thinking you're buying something that's very low margin. Why would that be the case?
The current cost structure of the Canada will be higher than the current cost structure of Indian companies. So obviously it will be any Western acquisition will be value dilutive in the beginning.
Why is that? I mean, there are certainly Western financial services software companies with more than 10% free cash flow margins. Yeah.
So different kind of case. So this kind of this acquisition will have a margin dilutive on the overall margin dilutive. So obviously we need to build up the accretion when we sign up a new core banking deals. We want to bring it to the value accretive in next 18 to 36 month period.
Okay. And if this is sensitive, you don't need to answer it, but is this because perhaps the previous owner hadn't taken price increases, that the prices weren't high enough for their customers?
Leave it
to
them,
yeah. Okay, that's fine. That's fine. So you have many customers and some have been customers for a really long time. Sometimes with financial services software companies, the margins can be much higher for a unit of growth than you have. And I'm wondering, out of all of your hundreds or maybe even thousands of customers, do you have some that are not profitable? And if so, why? And is there opportunity for you to make them profitable? This is at the free cash flow level after including working capital changes.
Ron, just to answer your question, I think I mentioned earlier also the margin question was asked. We have 3 businesses and we want to, our whole business design from 2016 is based on how do you keep a CAGR growth in double digits. So that's the whole approach. A lot of time product company gets into the trap of not growing and growing the margin. We want to grow both of it. So we build up one business and make it 1,000 crore business, then reinvest the money and cash flows from there to build up a second business. Then we make it 1,000 crore and then we reinvest back into third business, which is the AI business. So that's how our journey is progressing. So individually on a GTB as a business, our margins are as comparable to any other product company, which is a long-standing customers.
Right, right. When I look at other financial services software firms with similar revenues, they have higher margins though for the same level of growth.
Sure.
It would just seem that perhaps you have some products.
Ron, they are
Is it
valued much
possible
higher.
then that you have? I mean, it's
We are not
okay.
valued that much here. As of now,
Your
the company is
margins
not
are very
valued.
healthy, but is it possible you have some products where your customers just aren't paying you enough? You need to increase the prices of those products in order to make it worth your development energy and expense?
There's always a case. Some products will be more profitable than others, so we'll look into that. Thank you for your advice.
All right. Well, thanks for doing the call. I would humbly request that before the calls, the investor presentation and the financial statements are on your website.
It's now up on the website, Ryan. You can check that out. Sorry for the inconvenience, but it's now up on the website. You can please refer to that. Thank you.
Okay, you got it.
Thank you. Thanks, Ryan. Thanks for attending the call. Then next we have Mr. Mukul Verma, I think has left.
Yeah, just close the call. Let's see how many are left. Yeah. If something is left, only one question.
Then Mr. Mukul is not there. Jatinder is not there. So the last one we can have it around Mr. Rohit Balakrishnan from iThought PMS, if he's there. Rohit, are you there?
Yes, sir. I'm there. Good evening. So most of the questions have been answered, sir. Just two questions. This C1 deal that we have. So, sir, I was just checking their balance sheet that is there in their website for last year. So I think this division is loss making. So I mean, will we also incur? I mean, whatever you can share. You already mentioned it is margin dilutive, but will there be losses? Because I'm assuming that cross-selling, etc., will be probably will take quite a long time. So if you can just share maybe what are your thoughts maybe for the next couple of years? How do you think? Do you think the margins will sort of? I mean, because of the share
It will not be loss making. So we want to just tell you it's not loss making. We didn't done a deal in a manner that it will not be loss making for us.
Okay, that's happy to hear, sir.
Yeah.
And this last question, sir. So you already mentioned that 1,000 crore profits. So this is I'm
4 years. Yeah, I'm not right now.
Sir, I've been invested for last 5 years now. So and I've been tracking you for a long time. So I understand, sir. So I just wanted to hope and I mean I just wanted to reiterate that, sir. I mean, sir, historically we've grown around 15-16%. So with all what you've been doing, I mean, we've been investing ahead of the curve. We've been trying to invest more, and you've been articulating this fact that our idea is to keep growing the top line and keep on increasing our TAM and keep on increasing the runway. So is there and still so historically 15% growth has been there when these things were not there, and over the last 6-7 years you've invested a lot. So I know this is maybe a bit I mean you've been conservative, but what are the things that you are looking at where things can become faster for you? I mean, from a revenue growth point of view, because
Purple Fabric, digital, DEP, any core banking. I think you take anything, it can have a major blockbuster. We have to just remain calm so that we can deliver to our customer high satisfaction. This business is a non-forgiving business. You can't make a mistake. That's the only thing we want to protect. Otherwise, my GTB business, GCB business, I think the beauty of the business is what we have built in the past is everything is distinctively story. We have displaced and disrupted the existing competition each time. We disrupted Finistra, we are disrupting Temenos, we are disrupting Palantir. We are a company from India disrupting a global player with such a low investment of what you say 140 crore plus 200 crore, 350 crore. What the investment in terms of global terms? It's less than $40 million.
Right.
That's the power of our powerhouse of our R&D team and our committed team which we have in Intellect. It's an amazing team.
Sure, sir. So relative to that, of course, I mean, you mentioned the growth has been tepid because of certain delays. So hopefully, sir, I mean, next year should be a better year. You already mentioned Q4 will be better.
Yeah. Sure.
Thank you, sir.
Thank you, Rohit.
Thank you, Rohit. Now we are closing the call. 3-4 people who have left can write the questions to me so we can answer accordingly. And those also who have once again put their hand, just request them to please write back to us. And thank you for attending the call today. So now we are closing. Thank you, everybody.